Good morning, everyone. Sam is here from well, my website is down, so I'm not gonna say it. I'm making another one, and it's almost ready. In a couple of days, I'll make another video and give information about my new website, and that's where I will be putting all my analysis from now on. Anyway, I just want to show in this video that what's where we stand as far as the euro-USD is concerned. Three different scenarios, because I strongly believe in this market that it is going upside as well as the downside at the same time always. A lot of people say, stay with the trend. So what is the trend? I mean, a retracement on H4 is a big trend on a 15-minute chart. So if you say stay with the trend, then if you looking at the H4, you're not with the trend. It is a retracement. But if you look at a 15-minute chart and you trade 15-minute chart, then you are with the trend. Similarly, wave counts, Elliott waves. If you go and start counting, you can always find that both scenarios are intact. The Elliott wave will, one scenario will point to the upside, one to the downside. Similarly, harmonic patterns, they are always like that. One scenario will point to the upside, maybe a girdle, a butterfly, and then the other scenario, AB is equal to CD pattern, would point to the downside. But basically, what makes a difference is if then strategy. Like if it goes above this point, then it will go to the above scenario, long scenario, and if the price dip below this level, then it goes down to the downside scenario. That's it's most important. So it is always good to see and keep in mind all the scenarios, because if you have only one scenario in your mind will tend to agree that that's the only scenario that we can have, and the price will go to the downside only. That's it. And then if it goes up, then we are in trouble. But if you are prepare yourself and see that if this level goes away to the upside, then we will go up, and how far we go and where we go, all these, if you know ahead of time, then your mind will accept, and then you will change your bias, and you will kill your short position immediately and go long as with the price action, and that's the best thing to do. So let's get started. This is euro-USD H4. I put this chart a week ago on October 11, saying that EU may be making a triangle as a fourth wave and currently going up for wave D. So from this chart, we went up a little bit, probably like 40, 50, 60, 70 pips up, and then make a little dip again, but we're still hanging on around the trend line, and we might be still going up. That scenario is not dead completely, so it is there, it is intact. We can still go and make the D wave, and if we if we get a stop here, this trend line, and start dropping, then definitely we're gonna be coming down to this wave E. This could be a flat ABC correction, and the price will simply continue go up. I'll get to this scenario later on. That is the third scenario. So this is the first one, that we might get stopped here at the trend line to finish the D wave, and then drop back down to this trend line, the blue rising trend line, and the black trend line is also there, big on the trend line on a daily chart. And then wave fourth will be finished, and then for the fifth wave we will go up big time. This is the first scenario, Elliott wave triangle scenario. Okay. Now, what is the next one? Is I'm going to show it is also Elliott wave, but it is showing that if this big move here, when we had finished around here, was a correction, then we might be starting a big down move, and like 1, 2, 3, 4, 5 big impulse wave, and out of that we have 1 and 2 finished. Why this could be a sort of 1, 2, 3, 4, 5 waves, like it's 1, 2, 3, and then 4, 5, and then you have A, B, C correction around 61% already, and then the black count wave 3 will be starting, or already started, to the downside, and out of that, always the wave 3 usually carries 5 waves in it, because it's most of the time it's extended. Okay, so out of the 5 waves, the 3 wave most of the time extended and carries or made of 5 waves itself. So out of that 5 blue count, we already finished 1 and 2 because this is the retracement, a 61% retracement already. And if we don't go above this on Monday, Tuesday, it start coming down and break this. If you draw a little small trend line, or I did that, but I didn't save it. But this area here, this high is like 129.11. If we dip below that, then this scenario will come into play, and then we will be coming down here. Now you look at all the Fibonacci calculation are pointing as this area is becoming a very magnetic area. From like this point 0, wave 1 and wave 2, if you use this Fibonacci extension tool, then you have 127% coming in this area around 129.99, 125.99. Okay, the retracement tool from the bottom to top here, 61% of that is 126.05, 6 pips difference. And then if you use this wave 0, this blue count, this 0, this wave 1, 2, and the third wave of this blue is 1.618 for the wave 3 is coming around 125.90. So anywhere from between 125.90 to 126.05, 15 pips different. You have 3 big numbers, 61% of the retracement. This AB is equal to CD, 127% is 29, almost 26, and this blue count AB is equal to CD 1.618 is coming 125.90. So, and this also is, if you take this length here and these two highs with the parallel line here, the channel is coming down here. So this is a very strong downside scenario. If we go to the downside, this is what's gonna be. All right. Another scenario, which is also again to the upside, is the harmonic patterns. As we discussed in my webinars for the last couple of days, couple of webinars, I was talking about Gertley and butterfly and all that. So look at this. If we consider this blue count, excuse me, this point X, then we have A, B, C already made, and we're going for the D. D point is at 0.786, would be making a Gertley. And also AB is equal to CD, 100% is coming right there. All right. So this is the first scenario to the upside in a harmonic. The next target would be the X, the height of this. As you can see, AB is equal to CD, 127% is coming exactly to this high, 100%, 131.70. 127 extension of AB is equal to CD is 131.70 as well. So this is another very good calculation, and if we break this Gertley, then we go up there. Maybe stop, maybe not. If we don't stop there, then we're going for a butterfly pattern, which you can see that AB is equal to CD, 1.618 is coming 132.65, and the butterfly calculation is 127 XA is coming 132.70. So this is 132.65, this is 132.70, 127% and 161.8%. They are coming exactly very close by. So all three numbers are very, very strong. It depends on where we want to go, what we are doing. If we're not making that triangle, then we are definitely going to this Gertley or double top or simply butterfly. To be honest with you, this is the best scenario that I like. I don't like the downside. We are very bullish, and eur-USD is just keep going up. So this is a correction we did, and now we're probably gonna go here and make like 1, 2, 3, 4, 5 up to the 32%. I mean, sorry, 32.70 area to make a butterfly. All right. So now what we have is either we have this triangle. First, we will come down for one more last leg, E, and then go up. Okay, this one, even if we come down for this last leg, the butterfly and the Gertley scenario will still intact. Okay, because as long as we stay above this was our C point. Okay, so X, A, B, C, then you have 1, 2, 3, 4, 5 goes to the point D. That's perfectly fine. So this triangle scenario is also going with the harmonic butterfly, Gertley or butterfly pattern. The only thing that we have against to the downside is Elliott wave count this. If we are making 1 2 and then 1 2 3 and then 4 and then 5, okay, so to the downside, this area 129 is very important. If we dip below that, then we might be going down, so we will watch that very closely. If he goes above this area, we stay above this area around 129 40 50 and break the high. This with the high we made last time. What was the high? Let me see. Go on the real charts. This one, like 29. What is this 9? Oh, okay, whatever. I think this is. Let me see. This is a high of 29.90. Okay, so if we break that 30, and then we are going up. All right. So this is what it is. This is just wanted to show you guys, and be aware of where we're going, what we do. Again, if it's if then strategy, this is a very strong level here. We don't want to come down below that. Even if we come down below, we might bounce from here, 129.11, and if we go below that, then the bias might be changing to the downside, and we might break this trend line. This big huge trend line, the black trend line of our daily chart, is gonna be probably stopping this. So again, more chances to me to the upside, but again, like I said, that I'm prepared and I'm ready for my counts and everything, and I'll be watching all three scenarios very closely. And as whatever the way I get my entries for as Magic Wave strategy, then I'll use them and take my trades. So this is what it is. Thanks for watching. Have a great day.